Good evening, everyone. I'd like to call the East Lyme Board of Finance regular meeting of Wednesday, February 12th to order. The time is now 7:01. If you could please stand and join me for the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Next up on our agenda is delegations. This is the portion of the meeting where anybody from the public can come and address the board members, and the discussion would be pertaining to anything that is on this evening's agenda. If you would like to address the board on a topic other than what's on the agenda, then we would ask that you hold your comments until public discussion when we get to that agenda item. This enables our board to get through the very important items that we have on our agenda that we have to make motions on. So with that, is there anybody from the audience that would like to address the board?
Camille, does this, is what would that be under? Public building, discussion of budget process?
I'm not sure what you want to address the board about. Is it the handout that we received this evening?
That's part of it.
Okay, so that would be under public discussion because that's pertaining to the Board of Education, which is not on the agenda other than a presentation from the Board of Ed, and it looks like maybe nobody's here for that. So if you had comments relative to anything on the agenda, the audit that we're about to get a presentation on, or how we conduct our budget review meetings, or possibly even if you wanted to discuss something about the public safety building, then we're happy to hear those comments. But if it's something about the budget itself or the Board of Ed, okay. Thank you, Mr. Schultz. Okay, thank you. Is there anybody else that would like to address the board at this time? Yes. Ma'am, I'm sorry. If you could come to the podium, please, and state your name and address for the record. Hi.
Good evening. Can you hear me? My name is Maria Silva. I live on 26 Colony Road. I know you're having an audit presentation tonight. I just wanted to ask, when does the audit, be issued? Like, is that going to be within this month that you plan to be issued, or is that going to be just a presentation tonight and it be issued later, like March or April? Like when you expect the audit to be issued?
So I'm really not supposed to go back and forth, but I will address if the board doesn't mind, I'll address the question. So we have an audit subcommittee that was formed, and we did get a couple of the members of that went to the meeting, and so we did get an overview of the audit that was performed for the fiscal year ending June 30th, 2019. That presentation has been condensed so that we can so the entire board can receive the presentation this evening. It is for June 30th, 2019. The board will have questions, and if they're answered satisfactorily, we will move to approve the budget this evening.
Okay, so the audit would be for the audit June 30th, 2019. So that after this presentation tonight, you have your questions, and then you're going to move to, the auditors will have a date for issue of the audit.
Yes.
That will be uploaded to OPM, and we'll be able to actually see the financial statements.
Yes, and perhaps, Mr. Bassett, will you cover when that date will be in your...
Yeah, I think you'll go through the draft today. We gave a more completed draft than Anna has, so I would expect the audit would be issued probably like a week from Friday. That would be
Okay.
our goal.
Okay.
Then it goes through our second review process, and we'll issue on probably a week from Friday.
Thank you.
Okay, thank you. Any other speakers from the audience? Okay, seeing none, we'll move on to the presentation by the auditor. This is a draft of the June 30th, 2019 audit. If you could introduce yourself,
Sure,
please.
absolutely. Good evening. For the record, my name's Scott Bassett. I'm a partner with RSM, and we conducted the audit for the town of East Lyme for the year ended June 30th, 2019. As the chair mentioned, we had a hour and a half meeting on Monday where we went through the draft in detail to answer some specific questions that may come up. What we have done, at that point, the MD&A had not been completed, but that has now been completed, and I know Anna circulated drafts to you. So where we are in the process of our audit is we're through our 90% through with our work. We go through a second partner review, which is scheduled to be done. And we don't anticipate any significant changes other than maybe wordsmithing the document a little bit. So the numbers that we have here this evening, although they are subject to our quality control review, we don't expect anything to change with that or anything changed from our discussion on Monday. So what I did this evening is I tried to, and this has been working well for me, I tried to condense what our responsibilities are and give you some references as you go through the full document over the next week. If you have questions, to submit them to Anna, and we certainly will answer those to you. So what I would like to do is kind of go through our responsibilities, management's responsibilities, then talk about the financial highlights within the town for the year ending June 30th, 2019. Just as I was getting prepared for the meeting, I saw last year we issued in mid-May, and we're scheduled to issue in mid-February this year. So, you know, the process isn't as quick as we want it to be because we want to make that December 31st year-end date, but we're getting there. And I think, and there's a couple things I'll talk about that help that process as long as we are. So if you wouldn't mind, I'll start with my handout here and go through some of our scopes and things of that nature. Okay, so we were engaged by the Board of Finance really to do three things: to give an opinion on the financial statements, give an opinion on your federal awards, and to give an opinion on your state awards. The town will receive clean, unmodified opinions on all three of those statements as when we issue the reports middle of next week, end of next week. We do an audit in accordance with government auditing standards, also in accordance with generally accepted auditing standards. So we were able to fulfill all those obligations. We had no scope limitations that prevented us to giving you a clean opinion as we went through the process of the audit. So basically, whatever we asked for, we received, but whatever we needed documentation for, we received that documentation to confirm management's assertions as we went through the process. I do have some required communications that I have to submit to you. As your external auditor, we are independent from management, and we work for the Board of Finance, acting as the audit committee. There were no new significant accounting policies that were adopted during the year. There were two standards that had no impact on the town, GASB 83 and 88. Embedded in the financial statements, there are assumptions, there are estimates that are really brought about, really the big ones, really about the actuaries. The actuaries are involved in your pension plan, the actuaries are involved in the OPEB plan, and in your risk management with your health insurance funds. So those are the big estimates that are embedded in there. And we talked a lot about this on Monday, about mortality tables and discount rates and things and how they can impact your numbers. During the course of the audit, we audit all the departments, including the Board of Ed in the town, and the water and the sewer. And we didn't encounter any problems as we went through that process at the tax collector's office. Like I said in my opening, everything we needed, we received, and we were able to perform our scope and our duties. We had no disagreements with management as we went through the process. If we did have an audit adjustment, it was posted, so there's no uncorrected audit adjustments as we went through the process in the current year. We had one internal control weakness in the current year, which is a repeat from 2018, but if we issue by the end of February, it will not be repeated in 2020, and that has to do with filing a document with the Federal Single Audit Clearinghouse. That's due within 9 months after year end, and we'll be filing that by the end of February once we issue the report, so we expect that to go away. We did have a finding last year, which was a significant deficiency that had to do with audit adjustments, and as I mentioned, there is much fewer audit adjustments in the 2019 year as compared to the 2018 year. And that's probably why we're ahead of the game as far as we going through the process, just because of things of that nature. Management did not consult with any other accountants for, we call that opinion shopping as we go through the process. And at the end of the engagement, which will be next week, management will sign a representation letter basically saying, to the best of their knowledge, the financial statements presented to you are materially correct and properly stated both under generally accepted accounting principles and in compliance with all the federal and state single audits. So we'll get representations that is signed by both management here at the town hall and management at the Board of Education. The responsibilities of the engagement, management's responsibilities to prepare the presentation of the financial statements in accordance with U.S. GAAP, and management is responsible for the internal controls, the implementation and maintenance of internal controls to prevent and detect any material misstatements within the financial statements. Our responsibility is to express opinions on those financial statements, pretty much stating that they're materially correct. So I always like to say we can't worry about the $10 at the swimming pool because that would not be material to the users of the financial statements. But our job as we go through the process is to make sure that they're materially correct. And the biggest risk would be your bondholders, right? We want to make sure you're able to pay the bond. So as you look at your fund balance, your cash flows and things of that nature, that's what we do. Just to kind of give you an idea, we probably spend 650 to 700 hours auditing the town of East Lyme. So if you kind of put it in perspective, we come here, I give a presentation, but there's about 600 hours behind me to get us to this point. So we are here a lot downstairs in that room. That's where we are. Anyway, I guess there's nice places to eat, so that's a good thing. So as I mentioned, on the 3 statements that we will issue, we'll give unmodified and clean opinions on those statements. So that's kind of how that gets us here, right? That's before we dive in. Those are my responsibilities, management's responsibility as your external auditor. Some highlights, and these are things I would encourage you to read the MD&A that was put together. It really pretty much touches on the things I'm going to touch on tonight. But in a nutshell, what I tried to do is give you some page references if you want to go back, if you want to make notes once you go through this. The government-wide basis is a basis of accounting, as I mentioned on Monday, that's really seen once a year, right? It's the full accrual basis of accounting. So when you have your report from the finance director, and this is typical in all towns, so they're not reporting on this basis. This is pretty much a snapshot as of June 30th of what your long-term assets and your current assets compared to your long-term liabilities and your current liabilities, and where does that leave the town? And at the end of the year, the total net position at the close of the year was $107 million. Total net position of the governmental activities, which is everything other than the sewer fund, was $64 million. And the business type activity, which is your sewer fund, was about $44 million. So the big numbers in there are really your infrastructure numbers, your buildings and things like that make that up. But also included in there are these long-term liabilities that we talked about, which is your other post-employment benefits, your net pension benefit liability. So those things that get measured up and brought to the balance sheet, they're always been there, but this kind of measures where you are based on that presentation. Government activities had an increase under the full accrual basis of accounting of about $4 million. What you would expect, you're in the process of building a school, and as you build the school, you get some state grants that come in, and so basically a state grant comes in, and that drops to the bottom line because there's no expense against it. So as that capital grant comes in, it really drops to the bottom line to give you a net income basically. And then you'll start depreciating that building over that 25 years, which will have an impact. But as that capital grant comes in, it really just has no expense against it. So it drops right to the bottom line at that point because you're capitalizing that building.
I have a question, Scott, if you don't mind.
Yeah.
So I'm a little bit fuzzy on that accounting logic. Wouldn't that become a liability then if we received a grant and
No,
it was earmarked for a certain purpose?
No, you've gone through the process with the school construction process. You're submitting your forms. So they've said, okay, here's our match, and based on you submit a $100,000 bill, and you got a 2% match, they're gonna give you that $2,000 because they've approved those invoices, so there's no right of return on that. Okay, so you're good with that, especially on these type of grants, because it's that dollar, they accept that. So what they do, the state does do, is they withhold a 5% retainage of what they give you to settle up when they go through their final audit. So, no, the matching and the eligibility requirements are all proper under GAAP, and that would be for any community in the state of Connecticut.
So can you give us a couple of examples for that 4.4 million? What encompasses that
Yeah,
figure?
so, I mean, if you have, for instance,
Feel free to ask questions.
so in the current year, your capital grants are about $4.3 million. So that's a big part of it, and a big part of that is within your school system, okay?
Okay.
The business type activities is your sewer fund. Your sewer fund had a net operating loss of about $800,000, which is pretty consistent with what it does on an annual basis. And really that is derived from your depreciation on those capital assets. If you kind of look at your cash items, the money is that your charges for services that come in and come out, pretty much breaking even with those, but you're not capturing that depreciation portion of it within your user rates. And that's been a philosophy for a long time, and we mentioned it. So that $800,000 loss really is a direct match to what you have for depreciation. Now, the fund that you do talk about on a monthly basis, if not more, is your general fund. Your general fund is your operating fund of the town. And at the end of the year, the general fund had an unassigned fund balance of $6.3 million. And the total fund balance increased by $500,000 from last year to 7.4. The measurement that is used when you go to rating agencies and things of that nature is what's that general fund unassigned balance compared to your budgetary expenditures, and yours calculates out to about 8.7% in the current year. And of your budget expenditures of about $72 million. So that's your measurement, and that's something when management goes and talks to S&P about your bond rating, they want to look at that. So not a big surprise there. The difference between the 6.3 and the 7.4 are some plans that you have some fund balance that you have tentative plans for. You have $175,000 that was adopted in the 1920 budget. You have some contingent liabilities out there, and you have some encumbrances out there that makes up that difference between the assigned and unassigned fund balance. Okay?
Just a quick question. On
yeah.
the general fund balance, what is an amount that you want? Like, what is the goal for that? Or for
I had that
account?
question a lot. So basically the way you could go to the rating agencies or you could go to the GFOA, and there's different measurements to that. You'd go, and you could hear someone say anywhere from between 5 and 15%, and you'd be okay. My thought on that, and again, I'm not this isn't a gap thought, but just my gap my thoughts as I go across the state, is that the smaller the budget, probably the higher you want to be that 15%, because if something would come up, cash is cash, and you need cash no matter what, right? So where you are, you're probably, there's some big budgets out there, but in the state of Connecticut, you're probably in the middle as far as what a budget would be. Probably not on the small side, but you're not on the large side like some of the cities. So you can use your own philosophy based on that. But that's kind of where my thoughts are. I think the bigger thought is, though, is a fund balance policy of kind of, once you get settled kind of where you want to be, that you manage to that fund balance, okay? And that's probably, as you go to a rating agency, they may think of that as a more proactive type of policy. And a lot of the AAA communities have those type of policies, so it's something to think about, okay?
Thank you.
You're welcome. The other big activity, the smaller funds pretty much handled what they were going to do, but the big activity, as you know, would be in that bonded project fund. You're building that elementary school during the year, and so you had a lot of capital outlay. You had a lot of bonding activity that came in. At the end of the year, you had about $20 million outstanding for the school project and $3 million outstanding in short-term notes for the public safety building, I believe. And you've gone through and refinanced some of those things in August of 2019. And then on top of that, you issued about $5.4 million in permanent bonding. So if you want to know, and that's a lot of activity as you go to the market, a lot of legwork, a lot of prep work to get there. And I think you had 3 issues during the 19 year. I think you had a bond issue, you went out for some bands, and then I think you went out for some separate bands for the public safety issue. So a lot of work from the debt as you were preparing for that in the current year. We talked about the sewer department and the $800,000. The internal service fund, and that's your health insurance fund, that had an increase of about $440,000 in the current year. But Anna could talk to this a little bit more about than I can. It's just that you've switched to the state plan now, is my understanding, as of June 30, 2019. Anna, is that correct?
Well, July 1st.
July 1st.
Yeah.
So this fund is probably going to run itself out. Where everything ends up. So, we'll probably have a better, clearer picture just where we are based on the runouts on that internal service funds, what the health claims. And it takes probably about a year or two for that all to run through.
So Aetna's going to keep our plan open till 6/30/2021. They keep it open 2 years
Mhm.
after you leave.
Yeah, so they run that out. And the pension trust fund, you have about $27 million in your pension trust fund. And you had a net increase in that fund after paying your benefits of about $2.3 million in the current year. So you had a good year with appreciation on return on investments in the current year.
What was the ROI on that?
I can tell you, actually. 1 second. See, there's good information in these big booklets.
Yeah,
sometimes.
for sure.
So that money weighted return on your investments this year is about 6.75%. Okay, so the bulk of the statements are your notes to the financial statements, and I'm not going to spend a whole lot of time on those except on the key areas that I think are important. We talked about accounting policies, really no big adjustments or changes in the current year. Talked a little bit about those 2 different bases of accounting, the full accrual basis and the modified accrual basis. There's a footnote that reconciles that all together, and basically is taking your long-term assets, your long-term liabilities, and adding those in and any changes. So that's what footnote 2 is. Cash and cash equivalents. Biggest thing there is your investments, heavily invested in your mutual funds. A level 1 type of investment are your mutual funds. Capital assets, the activity there was for the school. That school's in construction in progress right now, so there's no depreciation being done on that school until it comes in full bore and it being used. So it's in construction in process right now. Long-term liabilities, and this is a big number, just like your investment number and your pension plan is. These are the big numbers to kind of talk about a little bit. The OPEB liability decreased a little bit during the year from $8.5 million down to $8.1, so about a $400,000 decrease. And the actuaries will probably account for that. They'll account for if there's a change in assumption, little change in your discount rate can make that change. The pension liability increased to $6.2 million. So when you take that $27 million that I talked about, your liability is $34 million, it'd be $7 million difference. Talk a little about, I might as well talk about it now, but as you look at that pension plan, that funded ratio is almost at 80%. So if you look at where you are and then you look at your funded ratio, that's pretty good. The national average would be about 70%. And in the current year, you adopted new mortality tables, so you adopted some things that impacted that liability, and that discussion in that liability So, anyway, so 80% is, compared to the national average, is pretty good, okay?
I have a question.
Yes, sir.
That 80%, is that trending upward from past
Well,
years or not?
It's pretty much, actually, it's pretty consistent with.
Pretty stable? And
Pretty stable this year, which I would have anticipated it to go down, to be
Yeah.
lower, just because of these new mortality tables. But I think we're measuring this as June 30, 2019, so the appreciation in your assets really helped you in the current year, because they probably performed better than what was anticipated. So I think it's, the trend is pretty consistent as far as where you are. And there's a table in the back that you could see where the trend is going. So you've always been right about there.
Yeah.
Not a lot of spikes, I don't think, either way, up or down.
Okay, thanks.
Okay, you're welcome. We talked about the bond activity, $5.3 million in long-term debt, $23 million in short-term, but that was, a lot of that was rolled over, $10 million of that was rolled over to long-term in August. Talked about the risk management fund. So that fund, that health fund, as you go into the new plan, you had about $1 million of runouts based on what the actuaries believe, based on their estimate. So now we'll see in the next 2 years just what that runout is, if it's more or less. But that's their estimate, and we take a look at that. The pension plan, a couple of key things. So your discount rate, you're using about a 7% discount rate, the actuaries are using. So the last 3 years, I think you had 12, almost 7, and 6.75, but they'll smooth that in over the 5 years when they calculate their liability. So you're using 7%, which I'd say is consistent what you see around the state, as far as you might be 0.25% lower, you might be 0.25% higher, but 7% is pretty much the standard that's being used in most municipalities. Talked about the net pension liability, and the key ratio is the funded ratio at 80% as of June 30th. Now, on the other side, on the OPEB plan, since you don't have assets put away in a trust, you have to use a much lower discount rate. And so basically you're using the bond rate plus inflation. And so that rate at the end of June 30th was 3.5. If you were to start a trust fund, you could increase that discount rate, which would decrease the liability based on the math of, but you'd have to start funding a trust fund similar to what you have with the pension trust fund. I'd say 50% of the communities do it in the state, and probably 25% do it where they're trying to get a goal to get to 100%, or 20% probably, I would say. Fund balance information, we talked about that. We talked about the key tentative plans with the assigned fund balance in the general fund, and we talked about that. And there are some pending GASB pronouncements out there. The biggest one would be one that have to do with leases, which comes in effective 2021. That's GASB 87. Probably, you just have to look at what type of leases. Not only are you paying for leases, but what are you receiving for leases? So one of the things people think about in a community is cell phone towers and things like that. Are they leasing? Is anybody leasing land from the town? From a budgetary standpoint, your revenues, you had anticipated using $750,000 in your budget, I think. But your revenues exceeded your budget by about $1 million, and the expenditures were under by $500,000. And then in that RSI is a lot of the statistics you want to see about the pension plan and the trending. There's some good 10-year information on those pension plans. As I said, you do receive federal dollars and state dollars. Federal awards are about $1.4 million in the current year. And we had an unmodified opinion on the programs that we tested. Your state awards are $9.5 million, and again, unmodified opinion on the programs that were required to be tested. The findings on the government auditing standards, I did mention, we do have one, but we expect that to go away in 2020, which has to do with the filing of the data collection form. Basically, the federal government requires you to submit to this clearinghouse in a different format than the financial statements, the federal awards that you received, and what programs were tested, and there's some time requirements on that to get that filed, and we'll be on time in the current year. And then we did not repeat the 2018 finding regarding number of audit adjustments. And that took a lot of work, because we did have, we called it significant deficiency in prior years. Means we had, as the trial balances were presented to us, we had audit adjustments back in 17 and 18. In the current year, it seems like there's more full review of them, and they came to us in much better condition, where we weren't making audit adjustments, and they're in pretty much in a gap format. So that took a lot of work. And I mentioned the pending GASB statement. So what I tried to do with this, again, I tried to page reference some things that I thought. I would just highly recommend you read the MD&A, which is probably 6 pages in the front of the bigger booklet that Anna passed out or emailed this evening. And with that, and I do think, I just wanted to mention that the audit committee or the subcommittee and going through the report in detail is very, very helpful for me as I present, because we are going page by page in a small setting, and can get asked and have good dialogue as you go through our process and with management as far as what really went on with the statements. So I do think that's a best practice. So that's my presentation, and I'd be happy to answer any questions you may have.
Okay. So 3 of us have been down this road before. Well, actually 4 of us. Pete, you've seen these reports before. Did you have any questions or concerns
Not
about?
at this point, I'm still trying to absorb it, so.
Yeah, it's a lot to absorb. Any questions or concerns on this end?
I have to read and absorb as well, but Scott, you mentioned the unassigned fund balance.
Yep.
And discussed that, and mentioned that it's good to have a policy, a written policy. And if I'm not mistaken, we do have a written policy. Yes, so I assume that that's something that is, being presented, or at least known about when we do go out, in the market.
Oh, we do, oh, yes.
Okay, and I believe it's this is a question, I guess, and this dovetails Ann's question as well. I believe it's 7%. I don't have the policy with me, but I believe we're not supposed to try to go below 7%.
That's very fair.
So, I think we're in the neck of the woods.
Absolutely.
It may be something.
No, I think
that
that's
down the pike we amend.
I mean, as long as I think it's key that you communicate that, and
Okay.
and we could, it's that's what you're looking for. That's what, and as long as you're following that policy as you go through the process, that's stability, and that's what they don't want to see, those spikes and valleys. They want to see nice and stable and managing to that fund balance policy. So I think that's terrific.
Okay.
Yeah.
That's good. Thanks.
That was helpful information tonight, too, to know that we're sort of in the middle of the pack. So if you're talking about a 5 to 15% target for
Yeah.
the unfunded balance, and we're at 8, I'd
Yeah.
say we're doing pretty well.
Yeah. There is there's a data source with OPM. They have some fiscal indicators that OPM of the state publishes. They're usually a year behind, but that's a lot of good information where you compare with different things that they measure. So, as you ever have questions about that, that's a link on their website, and I could probably find the link and send it to Anna if you'd like.
Okay.
Yeah, that would be helpful.
Mm-hmm. I guess we talked about during this, the subcommittee with regard to the target rate of 80% funded pension liability with we talked a lot about the tables, as you said,
Yeah.
the mortality tables.
Yeah.
And
Yeah.
that is actually going to require additional funding for the
Yeah.
pension contributions to get to that 80% target. If people are living longer, then
Yeah,
we're
that
gonna
makes
need more
sense.
money for that. Which is all good. It's all good. So the only concern I have is timing of the issuance of these reports. So I imagine number.
We have technically we have to the end of the month.
Okay.
With the state. Our goal would be through our second partner review, like I said, mid-next week. But certainly from a pure statutory standpoint, we have to the end of the month with the extension. So typically, as I mentioned, when you receive a draft report, you accept it in draft form, and if there's any material changes or significant changes, Anna would report that back to you, and we would come back.
Mhm.
There could be nits and gnats as it goes through the second partner review. That's just what they do as far as some wordsmithing and things. But if there's any significant changes in any of the numbers, we would let you know,
Of
and then we'd
course.
talk about that.
Of course.
And-
But I think that as people go through the details of the report,
Mhm.
if there's questions that they would like answered, maybe in preparation for next year's audit,
Mhm.
what would be the best way to handle that? Should we?
I think you'd
should
go
we
through
forward
Anna.
our
Yeah.
questions to Anna
Yeah.
individually? We can forward our questions to
Mhm.
Anna, and she can get the responses.
Yeah.
Because I think that would be helpful to
Yeah.
really take a good look now that we have
Yep.
a set of financial
Yeah.
reports.
Mhm.
Look at it, absorb it, get your questions,
I
ask
think
Anna.
I would say if they do that, because we're all kind of in this timeline, kind of say, have the questions
Not to
by-
hold it up,
Yeah,
not to hold-
No,
not-
but that's fair.
Yeah.
Like, if you could have the questions by and get the responses back, so, because once we take that draft off, we're not going to change it,
Right.
right? So unless
Right.
it's drastically, so maybe have a timeline, get the questions in by whatever Monday, whatever you think is appropriate, we respond while we're doing our back room work, getting this issued, I think would be appropriate.
Let me see what Monday's date is.
The 17th.
Yeah, holiday, so 18th. So do you think that the 18th would be an appropriate amount of time I mean, honestly, I don't, Rich and I sat through the subcommittee going through the numbers. There wasn't really anything glaring at me. But if you do have questions